Okay, so I believe that is not the way you should be looking at it as. It's more about what is that the crypto is bringing to the table. What is that cryptos like Bitcoin is bringing to the table. It is about a fast and free mechanism of transfer of money from anywhere to anywhere in the world, just like how we would use WhatsApp for sending out messages, etc. So if this particular concept is useful, then it has some value, and that's exactly the value that is being captured as the price of these kinds of cryptos, because there is no company which is doing it. It is the crypto itself which is running on the network to make it happen. So, but however, when we start seeing it at the price point of view, I think there is obviously we will have the bullish and bearish cycles. Nowadays, it more look like the stabilizer time, and this is definitely not the first, at least I am looking at this, probably the third one. So ups and downs are comparatively common, and if we believe in the concept of how this can revolutionize the payments and even the investments and savings, I think this will continue to have its value. But it is usually the market eventually that will determine it. So yeah, the plus and minus should be expected. Usually this kind of trend will be followed by the bullish trend. Yeah.
Awesome. Thanks for that. So I think the two key takeaways from whatever you mentioned is it's another asset class, similar to how actually the stock market is volatile. Understand it, be a smart investor. Probably on that particular point, Vikram, if you want to talk about in terms of investor education, in terms of how should people actually look at crypto as an asset class, and what is your thoughts in terms of how do you see this actually asset class moving forward? And also talk about a little bit about what stable coins are as well.
Sure. Actually, crypto is a very big topic in that if you want to talk about the asset part of it, yes, all cryptos are an asset. The gold 2.0, Bitcoin's second name is gold 2.0. It's been there since 2010 for a reason, because when the world has seen people are putting funds away in a lot of things, why not into crypto also? So they just made Bitcoin also as an asset class. But if you see in economics, what has been the real assets? Real asset. I'm not talking about just any asset people nowadays store their wealth in, store their black money in, not that. The real asset is gold. Why do I say that? Is because if something is really used very well, like it is the real use case is in payments and settlements and value transfer, it's widely accepted, automatically it becomes your asset. Because that's what, because it's used so easily and widely, you would hold more of it and automatically becomes a store of value and as an asset. So most cryptos are assets in itself, but what cryptos are really well used? What can be the history? What can be the future of crypto that is going to be a good asset? For me, I think a lot of people here may not agree, it's Bitcoin Cash. Because what Bitcoin Cash does is actually works exactly like how UPI works for India. What do I mean by UPI works for India? Indian UPI is getting exported, right? But we can definitely use UPI in other places. But then try and understand, UPI is actually only for India. Even if it moves abroad, it will move abroad and it will stay in that country, and within that country's banking system, it will work. But we cannot sit here and usually do it, usually send abroad. So if it all boils down to financial inclusion. So we were all talking about bringing people out of bringing out of the situation and including them into the financial sector. Do you know we all are in that situation? How do we all are in the situation? Can our UPIs take us abroad? Absolutely not. We are only local here. With UPI, we do great communication with money, but within India. But what does take us abroad? It's going to be crypto in the future. So CBDCs will come in and help people understand there is better than what is CBDC available outside there, which is a decentralized crypto. And eventually, once we use those cryptos, they're going to be an asset class. Well, Bitcoin is a great asset class, people call it. It is sluggish to move. It's going to cost a lot of money, just like how we move a big chunk of gold or a good painting. It's going to cost. Right. This is exactly how Bitcoin is. But the future of how payments is going to be and eventually going to settle as a good asset will be cryptocurrency, which is called Bitcoin Cash.
Okay, that's a different perspective. Thanks for that. Probably moving on from crypto in terms of the regulatory landscape. You've joined us from all the way from UK, and you're seeing there's a lot of action in terms of regulatory action in the Americas, as well as a lot of, let's say, forward-looking regulators. So you want to talk about how you're seeing the regulatory landscape, MiCA, as well as what's happening in UAE. You want to talk a little bit about that. And we'll soon jump into CBDC after that, but this is something which is very important for people to know in terms of what is crypto, as well as how regulatory landscape is changing, and how big banks are also looking at this as an asset class, while we talk about digital currency as well. Over to you, Medha.
Hi, thank you for the question. I mean, it's a loaded question, and regulation is something that is constantly evolving. There's no one shoe kind of fits all sort of a strategy. In terms of KuCoin, I think we believe that we are taking the perspective of users first. That's why we call ourselves the People's Exchange. In that scenario, first we need to figure out why is regulation even necessary. Like just yesterday, we announced that we have mandated our KYC policy for all our users. While obviously some traders won't be comfortable with it, but there are certain things that we need to adhere to when it comes to combating money laundering issues that we are facing, or in terms of finding the bad actors to kind of take valuable actions that are needed to secure more interest from investors, to have that kind of backing from them,
Sure.
Otherwise, we wouldn't see like financial institutions like BlackRock doubling down on crypto investment, or MicroStrategy just recently has a investment of, I think $4.3 billion in Bitcoin. So all these even MasterCard, as a matter of fact, they have even contributed towards, putting their money behind crypto to figure out a
That's
strategy.
again validating some bit of the ideas that Vikram was giving, right, in terms of settlement and others. We'll come to settlement systems later, but I think you made a good point there.
Yeah, and I think the overall objective, even for MICA, is also to structure the whole asset for market integrity, as well as kind of ensure that we do KYC policies more strictly.
Sure.
I think that kind of shapes up the confidence of, how we, look at money evolving, the concept of money evolving over the years.
Okay.
We're not saying that we're here to replace currency on fiat currencies. We are just saying that there's an alternate asset where people have the opportunity to kind of diversify their investment portfolio and also use it whenever there's a risk that,
Sure.
Nobody really reads about inflation and the concept of money in school, right? It's not very mainstreamed. It requires us to be more vocal about how kids and on the youth learn about how government and different economies control inflation, and how are we supposed to be able to be more agile to learn about those concepts and stay ahead of the times. So I think
Sure.
those are the few things.
I'll probably just go to Edul, as well as I'll come back to Sathvik on this. Edul, your views on this, as well as on, let's say, educating investors, somebody who's actually advising in terms of safe investments in this space. What is your perspective on regulations in this space right now? What's happening, and on investor education?
Yes, actually on the regulatory side, the problem is that there is uncertainty. And what is happening is that as time is progressing, more and more certainty is coming out. Like for example, with what's happening in the US, the one thing that I see definitely coming out of it is that a clear judgment of what can be done and what can't be done, and who's the regulator behind it. Whatever happens to Coinbase, Binance, etc., that might end up being secondary, but the action might end up being the primary driver of growth, right?
Sure.
And that's what we are looking for primarily across the world. Right? We are looking at that happening as far away in the US and UK and Europe, as well as sitting here in India, right?
Sure.
So that's about regulations. And as regulations evolve, that builds trust. Trust helps investors also get more confidence. And that is one part of the investor education. But a lot of the other parts that we see, at least on a day-to-day basis, when we talk to our users, it turns out that people are just interested in answering 3 simple questions. Where should I invest? How much should I invest? What are taxes around it, right?
Okay.
And explaining to people where should you invest in context of what's their kind sort of financial health, how much should they participate in as compared to what is their opportunities, what are their savings, and so on and so forth. And then of course, what are the tax implications of wherever they are investing, becomes really, really relevant and important for us.
Sure. No, thanks for that perspective. I think you wanted to add on to that.
Yeah. So I think first you have to think, why do we even need regulations, right? So the tech is already built in such a way that it follows its own rules, whatever is encoded in it, and everyone is accepting it, and it just works on its own, right? So, but we still have to consider, at the end of the day, we are citizens of a particular land, and the law of that land has to be honored. So what is legal maybe in Las Vegas is not legal here. What is the content that can be legally streamed in US? Some of that cannot be streamed here, etc. Right? So these regulators that we have in India have curated depending upon the mindset and the ability of people to understand and the ability of people to get conned, right? So based upon these kinds of factors, they have kind of coined a specific rules set, which actually is the regulation. So it is usually rare that we have regulations much before the businesses itself have any kind of presence in the particular country. But when it comes to crypto, I think it has at least been 10 years and we still lack couple of things, couple of clarity is still not given. But on the other side, if you see the brighter side of thing, is that out of say about 4 or 5 different things which I would say will be required for something to be called regulated, we have achieved about 3 of them, right? So we have clarity on when we were doing advertisements, what we can tell and what we cannot tell, what kind of disclaimers are to be given. And then let's say if there is any kind of fraudulent activity that we see where we have to go and report it. Even 1 year ago, we could not report it, right? So if someone is doing the fraud, yeah, okay, fine, we understood this is doing fraud, then what do you do? Right? So if it is banks, yes, they have a portal where they can actually go and report it, right? So but now for cryptocurrency companies like Unocoin as well, now we are able to report it. And then comes the TDS and income tax. So before this, people are saying, okay, this can be a long-term and short-term capital gain, income from other sources, this is a direct income, indirect income. So there is so many different headings people were using. But now they said that, look, if you are doing any kind of transactions in crypto, you cannot offset the losses and all the profits have to be paid for 30% as income tax, right? So these kinds of things is actually bringing the confidence of people one step at a time. I am not saying every particular regulation that we have is favorable for investors,
right.
But however, yeah, it's important that these exist. It is okay to not make 100 rupees, but if you are even making it 70 or 40, whatever you are making, it should not be kind of ambiguity of
right.
like how I did it, whether will I be in trouble after some time. So that should not be there, and that's exactly what the regulators have achieved so far. Only one thing I think which could also be helpful is if they say that, okay, this is a digital commodity, so it won't fall under equity or commodity or anything, it's a separate. So that kind of like the classification probably will be helpful, just so we know that what to expect from it, what not to expect from it, where we fall under, who is our eventual main regulator, right?
Right. So just on that point, I think the regulatory landscape is also evolving. So you have forward-looking regulators in Asia Pacific, also in UAE, Thailand, Singapore, etc., which have come out with very clear guidelines, and that has actually allowed corporate treasuries and others also to invest into crypto as an asset class. And in remote places where the payment systems are not great, like he mentioned, technology innovation in this space is actually helping the settlement systems and others. And then you have regulated platforms like Mudrex, KuCoin, etc., who are actually helping in this particular space. So just a point on investor education, because that's something that all of you are dealing with. Probably in terms of comms, you're a comms person, so how do you see in terms of sending that out, post which we are jumping into CBDC?
I think after the FTX collapse, every exchange in the world kind of geared up to figure out what can be done to kind of gain back the trust that they lost. But to be honest, that FTX problem was not really like a exchange or a crypto problem. To be completely transparent with users, we practice proof of reserves. And of course, that has to be done in a way which, you know, being a global exchange with so many tokens, it's very hard to kind of go on a full spree of auditing to figure out the reserves. But we do that as a practice on a monthly basis so that they know that the assets are collateralized. We also run several investor protection campaigns such as Think Before You Invest.
Sure.
So we believe that there are every kind of users out there, the uneducated, the unbanked, the people who don't even have access
right.
to regular banking, services. So how do we end up reaching out to those people and ensure that they are not a part of a FUD? FUD is one of the biggest thing that we usually face, which
sure.
we are not really scared of anymore. It's become like a habit of ensuring that we communicate effectively on a regular basis, and history is there to tell that how KuCoin has managed those effectively in terms of communicating with the community effectively at a real-time basis, being visible enough.
Clear communication as well as let's say training, as well as investing in investor education.
Reports should be regularized.
Probably for someone who's actually advising people to invest in crypto, you have a structured way. He's an exchange, so your people will come and probably exchange. So in terms of products, how do you see products involving in this space, and do you do any risk screening so that people are actually investing only in something like, as you mentioned, the new gold, or not investing in meme coins and others where people have actually lost a lot of money. And specifically in India, we have seen a lot of fake exchanges. People have lost a lot of money due to fraud, etc., which has happened. People promising abnormal returns. In a country like India, where I think returns are typically, people are afraid of investing in stock markets as well, so they've invested in this space. So what are your views on that in terms of screening risk or having a risk-based approach for investment?
No, of course. So I think a large problem for a lot of our users is that there is a lot of content and they are not really sure what is the kind of content that they should consume and what is something that they should ignore. And we've constantly been building tools around it. So we've got an academy where people can learn. We just yesterday launched a product called as Satoshi GPT, which is a AI bot that can help people understand what is a scam, what is not, what info is reliable, what is not, and get crisp, precise answers. So I think that part is something that we need to double down on. But at the same time, as you rightly mentioned, before we list products, we try and outline why is this product useful, what are the pros, what are the cons. When we create products for our users, and our flagship product is a product called as Coin Sets, where we've created these index/mutual fund style baskets that users can invest in. Over there, we have these different thematic baskets outlining the theme, and as a result, what are the pros and cons of this theme, why should you invest in, and so on and so forth.
Understood.
And I think this is really important just to set expectations of people right, and also to give them clarity as to where are they investing, what should they look at this, and from what perspective they should be looking at it as well.
Sure, thanks. Vikram, probably, I know you wanted to add on to that point. So probably that, as well as in terms of, they didn't answer my question on stablecoin.
In a minute.
Yeah.
I'd like to get that investor help, there is very clear demarcation between crypto on an exchange and crypto that you hold it by yourself. So for any level of investor or any level of buyer and user of crypto, I always promote, it's not like I do it, my exchange also does the same. InstaCrypto is a non-custodial platform. That means if you come and use InstaCrypto, we're not holding your crypto. We don't want to hold your crypto because the history has shown clearly people who are holding crypto for other person, they usually lose it. Lose it for internal hacking, external hacking, a lot of things happen. Very, very few companies have held on to the crypto. I would say my first startup, Unocoin, that I founded and got Sathvik in. So one of the first ones, and still holding this crypto, but a lot of others came and left. The reason they left is because they lost investors' crypto. FTX is a great example. And for that reason, we actually bring in little bit of guidance to our users. We guide them and we even bring them, supporting documents and wallets and everything to educate them to hold your own crypto. We don't want to promote you to hold lots of value crypto. Small amounts, hold it yourself. You will learn and you will be more confident about your own asset.
And probably as a practitioner, I can tell you that securing exchanges, securing smart contracts, your basics of cybersecurity, investor protection, those are all critical for exchanges to actually safeguard investor interest. So I think multiple regulators are working on it, and it's an interesting space to be in. Probably I think you wanted to make a last point on that, and I'm going to jump into settlement systems and how digital money impacts people.
Yeah, so when we talk about products in and around crypto, so generally the company like ours, we just say that do your research and then buy whatever you want to buy. But it may be like a simple thing for us to say, but we also understand there is a lot of complication and also the time and efforts required by a normal retail investor who may be investing very small amounts of money, which is more like a disposable income, because we also tell that only invest whatever you are prepared to lose. So obviously they are not going all in most of the times, and the amount of time they can spend to research and also to understand the technology behind it, people behind it, community behind it, roadmap of it, tokenomics, there is like way too much of things. So I think there is some part of the responsibility, even though it's not like legal responsibility, but it's more like moral responsibility, which the exchanges take up to say that, okay, I have done at least one round of research. I am providing this product to you, which should be somehow understandable, and I'll continue to make it more and more user-friendly for you in nature, and you can attempt taking a bet on it, right? So I think this definitely is like super important. I have seen exchanges who don't give a damn about whether it is right or wrong. They just want users to take that particular call. But there are some, like at least Unocoin, which put some efforts to make the first round of screening. So this, I think, will reduce the burden of how much of the education that the investors need to have themselves, and even if they don't, at least the percentage of them getting into the losses actually greatly reduce. But on the other side, we as well continue to write a lot of blogs, newsletters, send out emails about various things that continue to happen and whatever is happening around crypto in India and across the world. So that should to some extent keep them informed. But however, if there is a bull run, media will actually go all in to educate you everything you need anyway. So
Sure. So self-regulation as well as risk-based investment and it's a new gold. Plus, it may also be considered for value exchange in countries where the payment systems, etc., are not great. So there's new tech. So this technology has been the, let's say, harbinger of digital money or central bank digital currency. So CBDC, as we know it, or digital currency, is of two forms, right? Retail and wholesale. So probably, would one of you want to take? Maybe we'll start off with you in terms of how do you want to describe what retail CBDC is vis-a-vis what wholesale CBDC is?
Can I take that just about what is CBDC versus crypto,
Sure.
like as we have the point. So your CBDC is your central bank digital currency, nothing but a digital currency where governments can control it, and eventually it's all going to be a centralized CBDC. What is the advantage of CBDC? I would say once you bring in CBDC, the advantage of people learning about crypto is big. So that's a great advantage, I would think. Bring in CBDC and your own CBDC, that's when you realize it's much more easier to communicate with people from the government level. So the government level right now, they're doing it directly to your bank accounts. So that's what they did in the last 10 years. And the next 10 years, when you bring in a CBDC, you don't even need many middlemen, and you can directly communicate with people. But then this is what government can do through CBDC, right? What can people do to people, like peer-to-peer? That's what we got Bitcoin. And that's how crypto makes the change. And it's a far superior CBDC than a government-run CBDC. We will only know about this in a few years down the line. We will not be able to really put a point there and then say what is better. With time, we will be able to tell what crypto brings in. Crypto brings in a far superior CBDC than what governments can roll out. But I don't want to say that government should not, but government should roll out, and that's what gives a lot of knowledge to the people.
So probably just on the focusing again on the aspect in terms of what can happen, right? In terms of the multiple use cases that we are seeing. So another industry use cases, we'll see a lot of tokenization of real world assets. So if one of you would also want to talk about tokenization in terms of how will we see, let's say, real estate or other illiquid assets being brought about and a secondary market being created around it. And also on the point that the settlement system will also greatly benefit because we may move from T+1 that we are currently at, which is better than in many countries in terms of security settlement, we may move towards T. So probably if you would want to touch upon the aspect of...
I can do a quick one on the CBDC, your tokenization. There is, when you believe into tokenization, you have to use a blockchain and then use that particular tokenization to support your work or your company shares. So you can do a lot of things with the tokenization. But what blockchain do you want to believe in? You want to pick up the token from a blockchain that is going to survive. One of the blockchains that's going to survive, it has to be a decentralized blockchain. Any centralized blockchain will die and will be killed by the US government or Indian government. One of them will come down hard on you and then take down the coin. So your blockchain is gone. So to make sure what blockchain to choose, try and choose a decentralized blockchain. The top one right now is at Bitcoin Cash, and then Bitcoin, Litecoin, and Ethereum has also moved away from being quite a bit of decentralized to staking. So the core idea of tokenization should be what chain do you pick up the token from. So just make sure the token is decentralized token.
Probably to the other players as well. Sathvik.
Yeah. So when we are talking about tokenization of real assets, so for time being, there is of course a lot of hurdles when it comes to legality, but I only want to talk about the technology aspect of it, right? So what is this blockchain all about, and what was it capable of achieving? What is it capable of achieving, if you see? It is simply a ledger where the debits and credits are getting recorded, but it is not owned by one particular entity or country or regulator, but is distributed, right? So which is like a decentralized blockchain, whatever we call it as. So the moment we say decentralized in nature, then it is only bound by the rules that you write on day one about how it is supposed to work. And if you need to do any kind of upgradation, then more than 51% of the people have to agree, so that there is a new rule that can be passed. So now comes, let's say, the real world asset. The first thing probably we can talk about is real estate. Then we can talk about paintings, could be diamonds, etc. So when it comes to real estate itself, right? So today there is significant amount of friction to validate the ownership of a particular land, and then whenever there is a need for doing the transfers. Now the people who are capable of buying the entire land or entire piece of land may undergo this because it's part of the entire buying process. But now think about how do you expose comparatively a retail people who want to take exposure of say 10,000 rupees or something like that into something like a real estate, right? So using a technology like blockchain, it's definitely possible. So what usually people are trying to do, which still again, like I said, there is some legal complicated angle to it, but however, keeping that aside, so they can literally say, okay, I'm trying to buy this particular building, and they create one limited liability partnership of a form like that, and transfer that particular asset into that form, and make that form liable for taking care of that particular building. And for that particular building, they issue the tokens, which can actually be purchased by different investors. So some of them are even going to an extent that it can only be transferred between approved parties who are KYC verified. And now people are able to buy a smaller ownership of this kind of assets. And even there are more assets like that, people are even able to swap among it, etc. Right?
So just on that particular point, so SEBI has actually come out with guidelines around fractional ownership of securities as well as guidelines on REITs, because we are seeing multiple platforms and startups in India who actually looking at this as a major opportunity. So it's not only a new asset class, but it's an opportunity for fintechs and others to invest, and also for retail investors to actually broad base their investments also. Thank you for that, both of you. Probably moving on to you, in terms of how do you see the future of money evolving? So you'll have CBDC, you've got stable coins, you've got crypto. What do you see happening in future?
I think it's definitely an interesting time to see so many things evolving, and I think all of it can coexist depending on going back to the philosophy of what people really need. There are every class of investors. There can't be like one particular solution for all kinds of investors. There will be people who have no idea, or they're sitting on the fence because they don't want to invest in crypto because they feel it's all like a gimmicky thing where it's not backed by the government. There are certain fears like that. But I think with CBDC, if it's built on the blockchain technology, probably there'll be a smoother way of transitioning into a mass adoption through centralized exchanges. Otherwise, people who are very comfortable with the sector, they will have decentralized exchanges or use private wallets to kind of store their funds. It's to each their own, basically. Understanding your risk appetite, figuring out your investment strategy is a traditional way of going about your investments. But the fact of the matter, this sort of financial tool was not available before. And I think the pandemic kind of expedited the process of, learning more about how do you diversify your portfolio around it.
So the key messaging being, you see all of them coexisting, each having its own place. But as somebody who actually advises people in terms of how to invest, how do you see the future being? What is going to be the future?
No, so I think the purpose of all of these are very different. The purpose of a stable coin is to make sure that money moves into an asset that can be transferred instantly, right, where there is low volatility of price. The purpose of store of value tokens like BTC are to store value. Then there are growth tokens and so on and so forth, which are like stocks. Their purpose is different. Their purpose is to invest for growth in the future. And then the purpose of CBDC is to make that fiat, that stable coin that you have, that is given and issued by a government, programmable, fungible, so that efficiency comes into this system of offering financial services. So of course, all of them can coexist. The purpose of their existence will itself be different. And I think the opportunity is exactly there, where you can make sure that you're able to create these specific use cases and offer these different use cases to users for their specific problems across these products.
Awesome. I think thanks for that great session, everyone. We'll now open it up for questions. Any questions, anyone, in terms of capital markets or CBDC or crypto?
Hi, thanks for the great session. Question to Vikram. You'd mentioned that government decentralization or government CBDC might not be better as compared to, crypto. I'm not sure if I got it right, but I just wanted to understand the difference why a government-run decentralization in terms of currency might not be better as compared to what is out there.
The word government and decentralized, I didn't say it together. Okay. I said government and centralized.
Right.
So
sorry, yeah.
if the government is releasing a CBDC value and a stable token, it has to be centralized because government is managing it. It's definitely going to help because it's going to help those which they couldn't really bring into the financial inclusion because there also you needed them to have a bank account and then UPI. That was a second layer in a way. With CBDC, it'll be a straight first layer. So government's central bank digital currency, which is eventually centralized, will be a great tool for a learning curve for how crypto is going to work in future. But once all of those people in India will get onto it, because straight from their phone, they are able to do it now. I know we have UPI, which works from the phone, but to work, you know, there has to be one bank account at the back. But with CBDC, you don't even need that. That'll help people from India go global, because then exchanges of our CBDC to Western CBDC will be instantly done online. We'll be able to start communicating with everybody globally with our, because that's what India wants, right? India has been growing so much. We grow because we have easy way of communicating with people with money, which is UPI. That helped us grow to a X amount of trillion. We want to increase that. How do we increase it? By being global, by being able to easily communicate and do, commerce with people around the world. So CBDC is going to definitely help that. Eventually, it will help crypto understanding. That's the great opportunity that's coming with CBDC is what I think.
Yeah, so my limited points here is that to understand CBDC, we should just understand, like, for example, we have Paytm as a company, which is a private company. I mean, it's actually a public company, right? So let's say if that is bought over by the government, right? So then it's essentially the government or the regulator below the government, which is the central bank, like Reserve Bank, which is trying to do the required rules and regulations of how someone can use that CBDC for, okay? So why I think CBDC and crypto can coexist is because there are a lot of things where the transaction has to happen depending upon the instructions of the government or the way they want it, but not every transaction will be like that. So for example, whenever, let's say, the bank give the loan, right, so to people, a lot of times there will be a specific use that that particular borrower have to use it for, right? So, but if you are using CBDC and you say that for this particular CBDC only it can be paid for X category of merchants, you just cannot use it for anything else, and you kind of restricted that at the technology level instead of taking it at the compliance level. So there it was a really good use case that they are able to achieve. And whenever, let's say, if the government have to issue now some kind of subsidies, right? So CBDC, I would still see the app, whatever you use, to be like a bank account kind of thing. But it may not be like really bank account. Whether you call it as a bank or not, it's up to the government and up to you. So if you both agree that it's not bank account, it's not bank account. It's as simple as that. But still, the same kind of debits and credits are possible, making it work like any other account. But like this, it will be able to restrict, track, help customers, to go online. That's the first thing. To understand how to do digital payments, that's the second thing. Anyway, we have really good access for smart mobile phones and internet. So that kind of adds up to it. And it's like a lot of people actually can speak English, understand English, or at least Hindi. So all of these things kind of positions India to actually be the front of this kind of experimentation like CBDC and crypto, making it go together, yeah.
And just to add on to that, in terms of the number of CBDC projects which are going on across the region within ASPAC itself, there are more than 40 of them. There's a lot of work which is happening in terms of settlement using multilateral CBDC settlement swaps, etc. So you'll see faster money transfer, reduced cost of transfer of money. Also in terms of how does it impact. So in a country like where we already have UPI as well as the digital rupee will coexist. But in countries where they don't have faster payment systems and others, I think digital currency is a lifesaver in many cases. So it will continue to be a regulated space, but I think the innovation it's going to bring about in terms of capital markets for corporates and others also, it will be a game changer. So that is something that we'll definitely see in future.
So I think this comparison has come up a bunch of times. UPI and CBDC are not the same. UPI is just
it's
a
not
payment
the
layer.
same. So we are saying that faster payments in countries where there are no faster payments, with the advent of a digital currency there, the payment system is being transformed. That is the point that we are trying to make. In a country like India, so if you ask me, have I used digital currency in the last 3-4 months? I've had it since the last 4 months. It's only the first major retailer like Reliance which is actually going to be coming out with it. So with the adoption, what I feel is the wholesale CBDC adoption may be more in the initial days. Retail CBDC adoption may come in a little bit later. As people see benefits, people start using it. But I think as you rightly mentioned, all of these will coexist. Each one of them has got a different use case, a different market. So we'll see the advent of a new asset class in terms of tokenized products. Crypto is here to stay as well, because there are the likes of Goldman, BlackRock, all of them are investing as a specific asset class. But the need of the hour is clear regulation in terms of what is allowed, safeguarding user interests, as well as coming up with outlines in terms of cybersecurity requirements, anti-money laundering and others, which multiple exchanges are actually self-regulating. They are spending money in terms of protecting investor interests. And as Vikram mentioned, also in countries where there are there's no CBDC, there's no others also. So as a form of a virtual gold, people believe that encrypted, or let's say algorithmic money, is actually a proof of reserve, because at the end of the day, any central bank is promising you to pay. So these are all different views, but I think all of them are here to coexist. We are in for exciting times. So the way you use money, as well as the use cases that you will see, is going to be increasing. So thanks for an amazing evening, gentlemen, ladies and gentlemen, and have a great evening. Thank you.